Let's find out if Aditya is reading the same on the charts as well. Aditya, hi, afternoon. Good to have you on the show. Let's discuss the two stocks that we were flagging off. Indus Towers, especially, and the pressure that the stock is seeing today. Do you sense that it could be headed in for more weekdays? And what about the leadership names like Bharti? Where do you see them headed on the charts?
Hi, good afternoon. Thanks for having the show. So I believe, as far as Telecom is concerned, they have had their good run up, and especially talking about Bharti and Indus Tower, both of them had a good run up. Today, Indus Tower is down a bit, but I don't see too much of a correction in Indus Tower going ahead. It could be more of a sideways consolidation in the stock from here on. On the downside, 400 to about 390 is a good support area for the stock. My sense is stock will come and find support somewhere on those areas and then enter into a good consolidation phase and then resume its uptrend. If anything, I would use this correction as an opportunity to look at going fresh long on Indus Tower close to about 390.95, and on the upside look for a target of 460 on the upside. So my take on Indus Tower is I don't see too much of a weakness coming into the stock. Stock has come out of a good consolidation phase after an up move. We are seeing a bit of a correction, and that is likely to continue into a consolidation now. Talking of Bharti Airtel, I think Aisha, Bharti Airtel has had its own good share of run up. Now it's time for it to actually enter into some kind of a consolidation. From here on, I don't see Bharti Airtel hitting 20, 50% kind of an upside immediately, 15 to 20% kind of an upside immediately. And if anything, my sense is it would actually witness some kind of a cool off or a correction to levels of 1940, 1950. So it's not a bad idea to book out some profits if you're sitting long and on decent profits in Bharti Airtel and use any declines closer to about 1940, 1950 to initiate fresh long in the stock. From here on, I think 2100 to about 2070 is maximum that I see on Bharti Airtel.
All right, so that's the take coming in on select telecom counters. Let's watch out for that. But Dilip, the other space that is doing very well today is the whole cap goods space. And one of the other stocks that I wish to flag off is Cummins India. What's your own sense when it comes to these players? Because just the last quarter, wherein there was a bit of a disappointment, the stock actually did well, factoring in that maybe the worst is behind. But what's your own sense on this particular space and any stock that you like at this point in time?
So once again, I think the capital goods industry for the last 1.5, 2 years has been, a kind of buoyant, largely on the expectation that the capex cycle is going to give a good multiplier impact. And some or the other, that has not really happened in any serious way, as what we all can see. And there's no doubt that most of the cap goods companies have done well, whether you say Siemens, ABB, Hitachi, you name it, and Schneider, everyone, most of them have really done pretty well, and they have had a very good move. So I think maybe the interest will still continue because I think this expectation of the capex cycle being played out may not happen immediately, but I think the expectations will still ensure that the stock and the sector remains very much in the limelight. So I would say that yes, I would certainly hold on to the cap goods sector because I think that's one sector which possibly can see some action in the times to come, maybe over the next 3 to 4 quarters. So I remain quite upbeat on this particular sector, and I think some of the stocks like Siemens Energy, I think Hitachi Energy looks pretty good. I think Larsen and Toubro in particular, I would make a mention. I think that's another stock which has been quite resilient. And I think the way it has got the order books and the expected flow of orders. So I would continue to be bullish on this. Cummins India, I'm not too sure about it at the moment. I think their exports still continues to be in the gray area of what if, so many things are yet to play out. So Cummins India, I would reserve my comments. I would not be in a hurry to buy this particular stock. But otherwise, on an overall basis, yes, I'm upbeat.
Okay, so upbeat on cap goods, and L&T is the stock that Dilip is liking the most from that space. But let's shift the spotlight to chemicals now, because Niti Aayog has recommended a slew of measures to boost chemical industry. Let's go across to Sharad to know more about the proposed policy interventions and the potential impact by 2030. Sharad.
A very interesting development coming in for the chemical sector, as Niti Aayog has released its paper on the industry as well. Now this is important because this formulation paper has taken a lot of recommendations from the ecosystem, and this might be presented to the parliament as well, and this might lead to India's first PLI scheme for chemicals and a re-rating in the sector. Now, looking at the key details, the proposed policy, they are focusing on establishing a world-class chemical hubs and developing port infra and also giving an OPEX subsidy. Interestingly, they are expected to fast forward the environmental clearances and also secure FTAs to support the industries. There are key targets which are very important to know. First one is a net zero India trade balance in chemicals by 2030, a 5 to 6% production share in the global value chain, and almost 700,000 additional employment. Looking at the numbers, $220 to $280 billion Indian production of chemicals and a $35 to $40 billion of additional exports as compared to the numbers in 2023. The OPEX subsidy would be 65,000 crore rupees over the next 5 years, and additional 3 lakh crore turnover is expected to come in from these incentives. Now looking at India and China, how does the overall global trade stands? India is coming in at exports of 3% and imports it's 5%. What's for China? It is roughly 23% and 12% respectively. So what would be India's chemical market consumption? As per the report, current size is roughly $220 billion. It can go up to almost $850 to $1,000 billion by 2040, with the India's share going up from 3.5% to 10 to 12%. Lastly, the segments looking at the growth, specialty, inorganic, petchem, all of them are looking to grow between 8 to 11% on a CAGR basis till 2040 as well.
To make India a global export hub, to position India vis-a-vis China. There, we need to work on a lot of things like infrastructure, free trade agreements, even getting the foreign companies invest in India. So all in all, government wants to position India as an alternate to China. Then companies in the bulk chemicals space, companies like Deepak Fertilizers, companies like Deepak Nitrite, GNFC, they will be major beneficiaries because these have products which they produce in India but are not able to sell because of the Chinese dumping. So what government needs to do is invite these foreign companies to invest in assets in India. If PLI does not go through, will be the similar set of cycles we are seeing, the volatility. One quarter, the companies would do well because Chinese companies are not active in the market. Another quarter, we are not doing well.
All right, so that's about the chemical space. Niti Aayog's long-term target set for the industry, as well as how the Indian companies can actually perform in the times ahead, is something that Ajay tried to decode for us. But Dilip, with this, would like to thank you for taking the time out today and speaking with us this afternoon. It was so good to have you on the channel.
Always a pleasure. Thank you so much.
All right, moving on then, let's actually now look at the AMFI's recategorization that will be valid from August this year to January next year. Now, which are the stocks that will be moved around? Varun is here with all the details on this one. Varun.
Well, so AMFI has released a list of stocks which would be actually shifted from one segment to other segment. The categorization that would be valid from August of 2025 to January of 2026. Now, because of this recategorization, the overall market cap for the cutoff has actually been changed. For large cap, now the overall cutoff is 91,600 rupees versus 1 lakh crore in the December recategorization that was earlier done. For the mid cap, the threshold has actually now declined to 30,800 crores from 33,200 crores, which was done in December 2024. Large cap now will account overall 61.3% of the total market versus 62.1% earlier. Mid caps would account for 19.2% of the total market versus 19.6% in the December review, and small cap will now represent 19.5% of the total market versus 18.3% earlier. Now the stocks which have been moved from mid cap to large cap, that consist of Indian Hotels, Mars Godok, Max Healthcare, Apollo Hospital, Lupin, JSPL. These are some of the names. The stocks which would be moving from large cap to mid cap consist of Hero MotoCorp, Cummins, Swiggy, Polycab, Dabur, NTPC Energy. These are some of the names. The stocks which would be moving from small cap to mid cap consist of Narayan Rudale, Laurus Lab, Shola Finance Holdings, Radico Khaitan, And the stocks which would be moving from mid cap to small cap, they include Ola, IGL, Deepak Nitrate, IRB Infra, Tata Tech. These are some of the names which will be moving from mid cap to small cap. But let me tell you that the changes would be effective from the month of September, and this list is for August to January of 2026.